The markets are becoming increasingly worried about the debt ceiling and a possible US default. Will the debt ceiling be raised or not? And what is the consequence if the debt ceiling is not raised? What will the US government do to free up cash and prioritize spending? Is a slowdown in China and Germany a cause for concern? What is happening with the commercial real estate sector? What could the rise in distressed sales of office buildings mean? How did markets react to the increase in US retail sales? Stay tuned, there's a lot to chat about. And by the time we've finished, you will have a very good feeling as to how the markets have been reacting. Stay tuned, it's going to be awesome. Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS Method. If you're new, a very warm welcome and welcome back KS family. My goal is to assist you to be more of a financial and emotional blessing to yourself and those you love. If you would like to know where smart money buys and sells, please subscribe. Let's run the numbers. A very quick announcement. Polygon, Matic and Google has been released to the CTKS Method service. Also, for the masterclass LV30, US Central Banks and Financial Stress was also released. Financial markets are quite concerned about the debt ceiling. The debt ceiling is always used for political maneuvering. However, financial markets just don't like uncertainty. To understand the debt ceiling, it's really important to understand how yields impact everything. US Treasuries or US bonds are seen as a benchmark for other financial instruments, and when we see yields going up, in this particular case inside the markets, it's because people are getting concerned with a possible default. What does that mean, and why would why would the yields on bonds actually go up? The first thing to understand, you would potentially not want to buy something that's headed towards a great amount of uncertainty if you're buying that thing because you want a great amount of certainty. People buy bonds because they want no risk. They want a fixed income stream by loaning a certain amount of money. If the bond becomes risky, they will demand increasing interest rates as a way to offset that risk. Inside financial markets, there's so many ways that you can look at price behavior, both from a fundamental and a technical perspective. Technical's about saying the price reflects the current news. Why would that be the case? Because smart money always profits first. With the increase in yields, we can see that gold is suffering at the moment, and this is always the case. There is a very strong relationship between gold's price and inverse real rates. We discussed that inside the masterclass. Another thing that we're seeing coming out inside the market, fear is starting to go up. Also, when we look at junk bonds, we can see it's just leveling off. It's either going to bounce from here or it's going to break down. If that occurs, we would be concerned about what the markets would be doing. But of course, we always know the price is always moving in a wave. It's always going up and down. One of the best ways to detect risk inside the main market is to look at Bitcoin, especially Bitcoin's gravity. When we see Bitcoin at the moment, and we need to look into the smart money levels to see how significant this price action is. And we'll do so a little bit later on. But from here, we're looking at relativity. We can see that Bitcoin outperformed Ethereum, outperformed BNB. And we can also see that XRP is outperforming Bitcoin at the moment. Well done, XRP. ADA is being outperformed by Bitcoin. Bitcoin has also greater returns than Doge, than Solana, and especially Matic. And Matic's chart was released inside the servers. You can see all the upcoming support and resistance levels from a smart money perspective. And it will give you some indication why Matic's price is so weak at the present time. One thing to always remember, you control the trade or investment, but it's the market that controls the returns. You cannot force the market to give you the return that you want. You cannot force the market to give you certainty. The markets are always volatile. You just want to make this volatility your best friend and get in synchronization with the market. How do you do that? You look far and wide, but of course you must look at the Tier 1 charts. Tier 1 charts are the charts that move global markets. They're very, very important to understand. A lot of people do not look at Tier 1 charts, and then they're mystified as to what happens to their beloved things they're investing and trading in. It's obviously that the Tier 1s have whacked that particular chart around that you're looking at. Tier 1 charts will give you a very precise understanding of market sentiment and potential market direction. Professionals always look through the Tier 1 charts first and then make their trading and investing decisions. There are always headwinds inside financial markets. It's something that we cannot escape. The debt ceiling is a particularly strong headwind at the current time. The debt ceiling will be rectified. They will raise it. It's just a question of how much damage is done between here and then. There's a few things to pay attention to. If the US's credit rating is downgraded from AAA to AA, that will raise the risk inherent in the US financial system. People will want increasing yields, and that's going to push interest rates up for mortgages, for loans, for everything. Masterclass students, have a look at LV30. It gives you a lot of information on CDSs. CDSs, or credit default swaps, are very important to look at this current time. They'll give you a risk on or risk off sentiment indicator, and that's really important for people that are in and out of the markets. Regional banking is still a problem. Commercial real estate or the CRE market is still an issue. There have been a lot of equity outflows in terms of markets. The Fed direction is also still unclear. Also, some things to keep on your radar. The G7 meeting outcomes and the China recovery. When looking at retail sales month on month, the actual was a 0.4% increase, which was a growth, and that's good because the previous was 0.7% negative. The consensus, however, was for 0.8%. It disappointed on consensus, and it also disappointed on forecast. The forecast was 0.7%. So the Fed says, this is working. Our increasing of the federal funds rate is biting the economy. It's slowing consumption. In yesterday's video, the probability of a 25 basis point increase in the federal funds rate was 24.2%. And when we look at the 24-hour or the current probability, it's now 16.8%. It's dropped down a little bit. And 1 day ago, 24 hours from this particular date, it was 20.1%. The vast majority of traders and investors do not focus on this synchronization factor. That's where every day, each and every day, Kate and I focus you in on this synchronization factor. To get synchronized in with the markets, you must look at a lot of data, but it's really, really worthwhile. Financial markets pay you for your synchronization and penalize you through losses when you're desynchronized. Bitcoin is currently $27,041. There's a smart money buy area around the 26,600 mark, and there's a lot of overhead resistance above the 27,900 mark. Just keep these two areas in your mind. If you're curious what the different lines mean, just please have a look at episode 894. These are 1 week targets on gold, the US dollar, Bitcoin, the S&P 500, and the US 10-year. They're very important to understand. We can see that Bitcoin was starting the week mildly positive, but it's just in a consolidating stance at the present time. The CTKS method reveals for the first time smart money buy and sell levels, and it does so by marking up all of price history. When we look at the DXY, which started in 1967, if you look at a chart like this, you may use recent indicative price, which will RIP your money. It's much safer to use objective dynamic market structure. That's where smart money is looking to buy and to sell. We can currently see that the DXY trading at 102.594 came down to this smart money buy area, was rejected around the 102.207 and ping-ponged right up to the next smart money sell level at around 102.687. You'll see this time and time again. Price is always rebounding from a smart money buy level to a smart money sell level. If it doesn't rebound, if it cuts through it, it is more likely to go down to the next smart money buy level and then come up and retest that as resistance. You can see currently that the DXY is trying to get above this sell area, but the sellers are there pushing it down. Without objective dynamic market structure, you would not know that the smart money is there. When we look at gold and mark it up with the CTKS method since 1833 to find out what the objective dynamic market structure is, or ODMS, we see something particularly interesting. Currently gold is $1,990, and what happened? The smart money pushed gold down. Gold entered a resistance level, a smart money sell area around the 2020 mark. Tried again, couldn't get through. Tried again, and finally said, oh brother, I'm going down to recoup my strength to the next smart money buy area at 2000. But what happened next? It didn't hold it. It didn't rebound upwards, which meant the statistical probability was that it would continue to go down to the next smart money buy level around 1984, and that's exactly what it did. Gold absolutely loves drama, but it hates inverse real rates. If gold was Superman, inverse real rates would be kryptonite. In the last trading session, the S&P 500 closed at 41.09. If you were looking at recent indicative price, you may come to some kind of conclusion, but the smart money doesn't do that. They use objective dynamic market structure, and that means they mark up their charts in 1871. With this in mind, where is the smart money buying and where is it selling? And you can learn how to do this yourself by learning CTKS Method Standards Certification. We can see that recently the S&P 500 got above this smart money sell area, was trying to convert it to a smart money buy area, but failed. This is a failure here. Where is price going to come down to next? Well, it's going to come down to the next smart money buy area and then retest the one above. Ping-ponging between levels is exactly what price does. Members of the CTKS Method service, it's very important that you look at the S&P 500 and you know exactly how strong these levels are. SCs or Stanfield zones are drawn around SLs or Stanfield levels. SLs are the true market indicator of strength of smart money and market sentiment as well. Please make sure you know your SLs. The debt ceiling will be raised, but in between, the politicians will milk as much power and influence out of it as they possibly can. When I was young, I used to think that politicians were all about caring for a country. Politicians the world over are the same. They're all about caring for their own power and influence. And the world over, they'll use any technique, any tool, any event to exert more power. This is unfortunately the way the current system is run. When we look at the US 10-year yield, what we see is the debt ceiling is causing a lot of stress inside the markets, and that is pushing yields up because of the inherent risk of the US defaulting. Both sides of the house say that the US cannot default on its debt, but that won't stop them going to the 11th hour and 59th minute and 59th second to resolve things. Remember, politicians want to extract power. We could see some volatility in yields incoming. However, volatility cannot override where smart money buys and sells. The US 10-year yield is marked up from 1912 with the CTKS Method service, so let's have a look at where that smart money buy and sell actually is. This gives us a fantastic representation of where smart money is playing inside the market. We can see that the US 10-year yield could not get above this 3.515% mark. There was so much sell activity in this area. It pushed it down. But when things turned around, it spiked through, but couldn't penetrate the 3.574% area. Yields are currently 3.530%. All of this sell-side resistance, this smart money sell activity, means that it's not clear sailing for yields just to explode upwards. Increases will be met with sell resistance. If you would like to know what's happening with commercial real estate, please have a look at episode 865. It's a very, very good episode to cover that data. Always remember, price moves in waves, which is rule 4. It's an incredibly powerful rule. Turning to the crypto market, which gives us a very good indication of risk on or risk off sentiment. The greatest gainers in the past 24 hours, top 100, Conflux, Render Token, XRP, LDO, Sand, Mana, and Litecoin. Looking towards the greatest losers, top 100, Pepe, Carver, Flare, Injective, XDC, Sui, and Rocket Pool. Rule 138 is very important. All investors become traders every time they buy or sell. A lot of people narrowly define themselves as one thing or another. For example, traders would say, I'm not an investor. Investors would say, I'm not a trader. The truth is, you're just a participant in financial markets, and you just have a different time frame. We cover Bitcoin's gravitational bias inside the masterclass, and it's very, very important to understand. When we look at Bitcoin's gravity, that's this particular pattern here, and overlay it on all the other alts, we see some very, very interesting things. You can see Ethereum is currently stronger than Bitcoin's gravity. BNB is stronger. This is pointing to a particular turnaround inside crypto. And look at XRP. It's going ballistic. Something must have happened within XRP's universe. What could that be? Breaking court victory for Ripple as judge denies the SEC motion to seal the Hinman docs. The Hinman speech dates back to June 2018, when the SEC Corporation Finance Division Director William Hinman gave a speech at Yahoo Finance All Market Summit. And what did he say? Ethereum is not a security. The SEC does not want that information out into the public. But the court says, sorry, show it. With the CTKS method, we're always looking for market attention. Market attention comes and market attention goes. This news will definitely give XRP market attention. Currently, XRP is 44. Oh, it's all fours. 44, 44. Not good news for the SEC. But where is objective dynamic market structure? From this chart, you may be tempted to use recent indicative price, but we don't do that. We know where the smart money is buying and selling because we mark up the chart with the CTKS method. What do we see with XRP's price? We can see it's just blasted through a smart money sell area. The next smart money sell area is around the 45.50 mark. Another one up above that is about 48. And then we get up to around the 50-cent mark. XRP could do really, really well. Remember, investor attention is what it's all about. You can do very, very well if anything has investor attention, but you've got to be sure the investor attention stays with that particular thing. XRP is a dominating crypto. XRP has incredible power. It's a good one to put on your radar. But of course, you must always know where the smart money is buying and selling. And that is revealed inside the CTKS Method service. Of course, you can do this for your own charts to learn the CTKS Method Standards Certification process. What do you think? Will the rise in XRP's price continue up, or will something else happen? Let me know in the comments. We can also see that ADA's gravitational alignment is strengthening. Doge is strengthening, Solana is weakening, and Matic has been weakening for quite some time. But always remember, the weak become strong and the strong become weak. It's all about the move and ebb and flow of investor attention. There were some fantastic comments in yesterday's video. Thank you so much for everybody who reached out. And of course, if you didn't comment, thank you for watching yesterday's video too. Please make sure you go back and look at past episodes. They're very, very valuable. If you want to get a structured learning process, the CTKS Masterclass is the way to go. And if you want to know where smart money is buying and selling, that's the CTKS Method service. Keeping a positive attitude at all times is incredibly important. If you read the news headlines, you just go and hide underneath your bed. They're so negative, but this is the case all the time. It's not something new, it's just normal. That's why we seek to develop the habit of courage. How do we do that? We must know that life is on our side and not against us. Whatever happened in the past, that's the past. Today is a completely new day, a chance to begin again. Our minds by default are programmed to be negative, but inside financial markets, having a negative mindset will cost you a lot of money. You have to have an optimistic mindset. But you must manage your risk as well. Mindset plays a dominating part in financial markets. A fear-based mindset will shake you out of winning positions. That's why we have the CTKS Creed. These are daily positive affirmations for abundance, financial success, and happiness. You don't have to achieve to be happy. You can be happy right now, right this minute. Let's go through the creed and daily positive affirmations. A positive affirmation is something that you say towards yourself. When we say, I know the universe is designed to make me succeed, that's all about you knowing that the universe is designed to make you succeed. You say I because it personalizes it. When I read this out, it's all about you. It's got nothing to do with me. Let's get into it. I know the universe is designed to make me succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I always solve my problems with positive excellence. We know that all results come from the mind, so therefore a better mind creates better outcomes. And how do you get a better mind? It just starts with better habits. Please let me know in the comments what are some better habits that you would like to develop. And I'll do my best to refer to those in these videos because better habits are the key to a better life. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.